is three types classification of companies. The first one is companies limited by shares, the second one limited by guarantee, and the third one is unlimited liability companies. So next, there is 5 types of companies in Malaysia. The first one is public company. Public company is a company whose shares are traded freely on the stock exchange, for example, Tenaga Nasional Berhad. For the second one, private company, a company whose share may not be offered to the public for sale, which operate under legal requirements, for example, deals. The third one, exempt private company, is a private limited company. The share should not be held or are not directly or indirectly by any corporation. Next is foreign company. It is defined under the Company Act 2016, which is a company, corporation, secret society, association, or other body. For example, is JTC Kensington. Lastly, government-linked company is defined as a companies that have a primary commercial objective and in which the Malaysian government has a direct controlling stake. For example, Petronas. There is many registered requirement based on CCM, which is at least one director required to establish a company in Malaysia. There is no criminal, the age above 18 years old, company business must be addressed in Malaysia, and the last one is share percentage value for each shareholder.
So today I will explain to you about financial reporting requirements. So the first one is accounting and other records. It is to be prepared and presented in accordance with all approved financial reporting standard. The second is financial statement. It is to be prepared at an interval of not more than 50 months and are to be duly audited before their distribution to the members or before the annual general meeting. The last one is director report. It is to be attached to the financial statement of the company, and may also contain a business review and a fair review of the company business. So next, there are 6 type of element in annual report, which is chairman statement, corporate governance statement, audit committee report, statement on internal control, social responsibility statement, and financial statement. So we continue with legal requirement. In Bursa Malaysia Securities Berhad, the company listed will make additional report about the company result. They are expected to file a preliminary result statement within 6 months after the end of the financial years. In addition, the company listed shall issue a semi-annual report on their result within 3 months of the end the half years.
I'm going to talk about advantages and disadvantages, changes from partnership to company form business. So, first of all, I will talk about the liabilities. So for the partnership, the liabilities is unlimited, which means each of everyone in the partnership should be responsible for the debts, while for the company, the liabilities is limited, which the owner only is responsible for the debt. Next, in terms of management, in partnership, partners can take part in management of the firm, while the company, the ordinary members cannot take part to manage the firm, but only the directors can manage the firm. Besides that, partner can bind his own contract can bind form by his act, while the company cannot. This is because in company, the director only have the power to bind the form. So next, we move to the disadvantages of the company. In company, a single member cannot wind up a company, while a partnership may be dissolved by any partner at any firms. Okay, this is because for the company, once the name is removed from the register, the company is no longer legally exists. Last but not least, a member is not an agent of company or of other members, while partner is an agent of other partners and also firm.
So I'm going to explain the difference in disclosure of financial statement between company and partnership. So in terms of equity, as for company, the earnings that are not distributed to the stockholders will remain as retained earnings in the company. While as for partnership, partners can withdraw the fund as compensation to the withdrawal account, as partnership have two accounts, which is withdrawal accounts and capital account. So the next thing is type of statement. Both company and partnership use two different statements. As for company, they will be using statement of changes in equity, while in partnership, they will be using income statement. The question is, what are the elements in both different statements used by company and partnership? In statement of changes in equity, they have changes in share capital, profit, revenue, and other capital reserves during the year, while income statement shows a schedule on how the net profit or loss is distributed to the partners. The next point is capital. In company, the accountant must record the stockholder equity in capital stock account, while for partnership, the capital reflects the equity each partner has in the partnership. The last part we are going to talk about is taxes. So in company, the Internal Revenue Service looks at company as independent taxable entities. Accountants for corporation must understand where the company tax liabilities cut differs and report this to the upper management. And for partnership, unlike companies, a partnership is not a taxable entity. The responsibility of the taxes on the partnership are placed upon the individual partner.